Now, in the early days of 2019, let's have a closer look at world markets. I have economist Enver ERKAN joining me in the studio to talk about this and discuss further. Enver, welcome to A News.
Thank you.
It's great to have you on the show again.
It's great to see you again.
Yeah. Now, I'll go straight into my first question. Can you tell us how global markets started in 2019?
Yeah, risk barometer equals Trump and equals US 10-year bond yield. Asset prices cannot make a good start 2019, of course, and all the risk factors that remain in 2018 increase the risk perception of market participants, of course. And we have the risks of cooling in global economies, low growth, low inflation, decline in oil prices, Trump risk factor, trade wars, and Trump-Fed fight, and this issues increases the concerns of the global market participants, of course. And in this risk aversion mood, we see the global stock exchanges go down in harsh movements, and also investors go through the safe assets, safe havens, etc., gold, maybe, and developed countries bonds, and the uncertainties make 2019 a volatile year. The volatility theme is the active theme now.
Now, one of the main topics that's kind of on the rise at the moment is the fall in Apple shares. How did the fall in the shares affect the world market?
Yeah, the important reason is that why Apple revised its forecast for the first quarter of 2019. The slowdown of China is the main issue, and slowdown of China means the global slowdown, of course, because China is the main demand factor, the main global demand factor of the economies. So that global recession would make iPhone sales weaker, of course, and the investor side consider it from the global slowdown side, of course, and this Apple's statement increases the concern of global downturn, so that the markets reacted excessively, both the Apple share price and also the global indices side.
Okay, now going back to China, a US delegation is expected to visit China next week for trade talks. How will these talks influence the relations between the two countries?
Yeah, new starts to trade talks will begin next week after the ceasefire between Trump and Xi Jinping in the G20 meeting. I think the main issue, yes, dialogue may be positive, but we know that Trump's aim is not to narrow US-China trade deficit, to change China's policies entirely. And the most important issue is that the intellectual property right. US develops the technology, US engineers develop the technology, and the Chinese copy that technology and sell it for a cheaper price. And that makes competitive advantages for Chinese companies, and this drives Trump crazy. So that I expect harsh trade talks between from the both sides. A dialogue may be not enough. I think the uncertainty continues until the end of the 90-day period, so that the uncertainty continues, and also trade war is continuous through that trade talks, I think.
Okay, well, it sounds like a negative spin on the situation, so it doesn't look like relations will be improving anytime soon in terms of the economy.
Yes,
for 2019.
I think the trade wars issue is the main global risk issue, because we have the risk of declining global trade volume, and also the risk of global slowdown through the Chinese economy side, and we see that Chinese economy slowing down recently because of the Chinese economic indicators such as manufacturing PMI. We see declining below 50 level, and shows the narrowing of Chinese economy. So that I think the trade talks, trade wars will be a more negative one for the Chinese economy. Chinese PBOC reacted this negative news and met the current expectation, reduced the RRR rate by 1 point. Approximately the weather may change because of the liquidity injection, but I think the risk of economic slowdown continues because of the both domestic factors and also the trade wars issue.
Mm-hmm. All right, and my final question to you is, how do you think recent events will shape the world economies?
Yeah, as a risk barometer, we follow the U.S. 10-year bond yield, which is the continued downward movement below the psychological level of 3%, and we see the 2.60, 2.50 levels as significant. The downward movements below 2.50 may be a good indicator for the risk aversion mode. Because of the increase of the bond market, developed bond market, because of the safe trading need of investors. And also the economic activity is cooling or not, in both US and China is a main important issue. The weak inflation may exacerbate recession discussions, but we will follow the US and China inflation data next week. Mm-hmm. And I think in such a case, through the ongoing global risks, S&P will make a dip in the first quarter, maybe to 250 level because of the main factors. You know, U.S. government shutdown is continuing and makes a great uncertainty for the U.S. economic activity. Of course, the House passed the bill, but I think Trump administration will veto because of the lack of border wall funding. So that I think the volatility would be the main theme for the main markets in the beginning of 2019 era.
Mm-hmm. Enver ERKAN, thank you for joining A News and thank you for your insight.
You're welcome.
Now, in other news, in the Pacific, Thailand's first tropical storm in 3 decades killed 1 person.